Welcome to Money Matters with Greg, where we dive into the money conversations shaping your life. From investments to estate planning, insurance to taxes, we cover it all with a fresh perspective. Join Greg and his guests each week to get inspired and take control of your financial future. Let's get started. Securities and investment advisory services offered through LPL Financial, a registered investment advisor. Member FINRA SIPC.
Welcome, good afternoon, and welcome to Money Matters with Greg. It's a show about money. I'm Greg Farrell, CEO and owner of Farrell Wealth. It's a wealth management firm, independent wealth management firm here locally in Valparaiso, Indiana, and then helping clients. We're in 24 states now, so we're all over the nation. I have a new office in Tampa, and we talk money on this show. This is episode 174. Where we can talk about money, help you add value to your life, maybe save you some time, which is obviously very valuable to you, save you some money along the way. And we talk different topics on the show. We've gone everywhere from mortgage brokers to estate planning attorneys, you name it. But today we get to talk about real estate with our good friend Matt Evans, who's local here in Valparaiso, Indiana. He's very involved in the community and does a great job. He's owner and broker of Remax Real Estate here locally. And I just want to talk with Matt about some things in the real estate world that might be able to help you and kind of go through some questions. And then we're going to give you a chance to be able to contact Matt directly too. So if you have any questions about what we talk about today, how to reach out and whatnot, you can find us on @FarrellWealth everywhere on all socials, YouTube channel, you name it. And then you can find this on a podcast anywhere you pod, Apple, Spotify, as well as our YouTube channel down the line. So with no further ado, welcome Matt Evans.
Hey, Greg, thanks for having me on again. I really appreciate it. I don't know what other episode I was on, but I think it might have been like 14 or something.
It was pretty early. We're glad to have you back, man.
Great to be back.
As you know, as I mentioned, you're very involved in the community. By the way, congratulations on being named for the chamber. You're what now, chair or president?
Board chair, just about ready to
Awesome.
to jump off that position as we end 2025. But it's been a pleasure to be the board chair of the Valpo Chamber this year. Yeah.
Very cool. Good for you, and thanks for your service and all of that.
Sure.
For sure. Just simple questions, really, to start. Want to talk about mortgage rates initially. I know they've come down considerably. I know that 30-year, 15-year both have come in quite a lot. Are you seeing? I mean, we're seeing at 6.19 on the 30-year, 5.44 as of December 4th, 2025. Both of those have come in probably about 50 basis points or 0.5% or a little bit more from the beginning of the year. What are you seeing as far as mortgage rates out there, Matt? Is it helping? Is it helping the business or is it hindering? What are you kind of seeing on the mortgage front?
We've kind of just seen kind of a sideways slide, slight ups and downs here or there. And it was funny, but not funny, I guess, for us real estate agents, but about a month and a half ago, we actually saw the rate lowered by the Fed, and the next day the rate went up in mortgages. So they don't necessarily coincide, and I think it's one of the biggest maybe fallacies in the national media. However, sometimes our rates actually anticipate the Fed change. So as of last week, when I'm looking at a local bank's rate sheet, I see anywhere from a 15-year at 5.875 up to a 30-year fixed at about 6.25. And it seems like we kind of been stuck there for a while.
Yeah.
So that hasn't necessarily spurred the market, but boy, anytime we see a small drop in these rates, people react and they buy and they sell, because quite honestly, interest rates are keeping sellers from selling right now too, that could slide into other products.
Oh, really? Well, that makes sense. If I can't sell my place at a certain rate because I'm going to have to go out and get another rate somewhere else.
That's right.
And I might just have a lower rate right now. That makes a lot of sense.
Yeah. So a lot of times in real estate, one of the terms that people say is, date the rate and marry the home, right? And then that means you're basically, you need to get the home that you like, regardless of the rate is, to suit your lifestyle at the time, right? Whether it's upsize, downsize, family growth, family shrinking, change of job, whatever it is, get the home you like and need, and then go ahead and transition into a lower rate loan product through a refinance someday, right?
Yeah. Yeah. This is a great point. Get in there, get the home that you want.
It's a
Then
good way to go because you get in and you get the home you want. And I don't know if you remember back in the early 2000s, I can remember personally refinancing my home about 3 times,
right.
because rates kept sliding. And I think my wife and I, Colleen, were in that home for about 6, 7 years. And when it went down, we took advantage of that and refinanced. So if we do see rates go down into the fives, which I'd love to see a five in front of that number for all
Yeah.
these products,
Sure.
I think the market would react so strongly. I don't think it needs to get down in the threes for that to happen.
No, it's
We're
not
not going
going
to
to
see those
three.
rates again, right, Greg?
Yeah, and I think we're in agreement. We don't want it to go to three either, because then there's an issue. I mean,
Right,
this is the new normal is fives and sixes.
right,
And that's just kind of be the future. Get used to it is what it is. It's not that bad because, I mean, I remember back in the 70s and the 80s, it was, mortgage rate was 21% and you were happy to have it,
right, right.
So what
And
are you
I'm
seeing?
constantly reminded of that by the older, the more seasoned folks that have owned homes.
Oh yeah, absolutely. Well, a CD rate was 13%,
Of
so,
course, homes back then were
back in the day.
125 grand or 80 grand, so
Yeah,
there's a
exactly.
difference.
Very, very true. What are you seeing as far as the environment right now? Talk to us a little bit about maybe the macro, micro
Sure.
level of what's going on out there.
Well, I think nationally, one of the biggest discussion points in real estate, and I'll start on the residential side, is that attainable housing is being talked about a lot. So people are finding that, the price of housing has gone up, the price of construction has gone up, the price of developed lots has gone up. And for new homes that are being developed, the majority in Porter County, Northwest Indiana, we see fall in the range of probably 350 and up. Now we do see a few builders doing attached single family homes in the lower threes, but for usually a single family detached home now we start at like 350.
Wow.
And that's not attainable for a lot of people starting out, young couple, a single person looking to buy a home. Some of them need a little lower home payment than that. So I think one of the biggest things we're seeing here locally in Valparaiso is some development in that regard. There are new organizations out. I'm involved in one of them called Paradise Community Homes, and we're actually working with local builders to bring product at or below market price and actually deliver some home equity. And what we're trying to do, Greg, is to build generational wealth again in some of these families that otherwise wouldn't be able to do it. They'd be renters for another 10 years, maybe, right? So
Right.
we're trying to make a difference in that. And that's not a Valpo or a Northwest Indiana problem. That's a national problem.
Yeah.
On the other end of things, we're seeing the need for some luxury, believe it or not, some luxury lots yet. We're starting to run out of some development space in that. And we're actually, I know the city's getting ready to kind of take a look at the lot stock for builders and see if that's the case. But we believe in hearing from some folks that we are a little bit short on luxury house lots. So, Valparaiso it has varying, price points of housing, and we want to see continue to have supply in that. As far as resale, I would say that we're kind of in a softer buyer market environment right now. Part of that seasonal, right? It's full on winter outside right now.
Right.
And part of it is probably rate driven, and part of it is kind of national news driven with, kind of the turbulence we've seen over the last several months with tariffs and other things. So people always put a pause on the big expenditures when that happens. But we're seeing us stay really strong in this area. We're still selling homes. We're putting deals together throughout December here on homes. On the commercial side, if I could transition into that for just a minute,
Yeah.
we aren't seeing probably as many businesses open right now due to the climates we've seen. There's not quite as much demand for commercial space either on the for sale or the for lease side. But we are still seeing a lot of people look to open here that have been doing business in Lake County, Indiana, expanding this way, that have been working in Illinois, coming this way. So we do need to supply retail space and a small light industrial kind of business park type space for those users. And of course, everybody wants to be in downtown Valpo. that can't always happen. They might want to be in downtown Chesterton. That might not happen just because there's no space for them there.
Right.
But the commercial environment is staying strong here. And actually, one of the biggest projects right now is we're working on zoning and the UDO and comp plan revision for the city of Valpo right now. I'm involved in the planning commission, so that's why I have some of this knowledge, as well
Yeah.
as some of my other roles in the city. So overall, I don't know about you, but I think people want to live and work here in Valpo still.
Yeah, 100%. I'm also seeing, I have five new neighbors in my street alone. They're all from Illinois,
Yeah, yeah,
St. Charles all the way up to Winnetka.
yeah,
I was in Illinois 23 years ago and came over to Valpo. That's how I found Valpo. So,
yeah.
the waves started years ago, and it's come a long way since then.
It has. It
You know,
has.
overall, are you still seeing that trend?
Absolutely. I think 2/3 of the buyers I'm working right now are from Illinois. Another one's from actually Michigan City or LaPorte coming over this way. So we see in migration here. Um, I do think there's some regional game changers that we've seen take place. One of those is the improvement of the South Shore Rail into downtown Chicago,
Yeah,
and transit-oriented development around that, whether you're in Lake County or up near Chesterton or in Michigan City, where housing and market is being built around those transit sites that now serve Chicago in about an hour. It used to be that, what was it, an hour and a half train ride from Dune Station
yeah. If
to
it
Millennium
worked,
Park.
right.
So that's kind of changed the game a little bit, and certainly Valpo Dash has made a difference too with those people commuting in Chicago that want to work here. That gives them an affordable, lower stress way for them to get in and out of the city. So
Yeah, and just for those listeners out there that don't know what the Valpo Dash is, it started as a bus community. Basically started off with one bus, a nice, beautiful, RV type bus and
yeah,
quality modern coach. And then I think we've been up to as many as five.
yeah, I
At
think it's 3 to 5
I think
somewhere
it's
in
three to
there.
five on a regular basis from here into Chicago at different times. As a commuter, it's just fantastic. The show's Money Matters with Greg. I'm Greg Farrell, CEO and owner of Farrell Wealth. We're broadcasting here on WVLP 103.1 FM, as well as anywhere you pod. We are honored and flattered to have one of the real estate gurus here in the area to talk about real estate, and Matt Evans, and just kind of going through some questions that I have for him in regards to where we are, where we're headed. Thanks for that update for
Yeah,
sure. Also, is there anything that really listeners need to know as far as what to watch out for? What's going to cost them money ultimately in some sort of transaction, in a real estate transaction, whether they're starting their
sure.
own home, building, or whatever it might be? Do you have any sort of tips for the group?
Yeah, I think one of those things is always consider property taxes, HOA fees, those extra monthly expenses that you're going to incur either as part of your escrow payment or as part of your monthly expense with an HOA. So we see HOAs, especially in condo situations, where they're maintaining the house or the outside of the building, everything basically from the drywall outside the drywall, the lawn, the snow removal, the trash. Those fees can be anywhere from 400 to $600-700 a month. So I think it's important to get your head around what those expenses are when you're buying. The second
Yeah,
thing I'd say is when you're looking at property taxes, is knowing that in Valparaiso Center Township, as we sit, it tends to be about 1.2% of your assessed value is your tax payment every year. So if you break that down on a monthly basis, you'll understand what that is. And of course, any good mortgage broker is going to give you those forecasts in advance so you know what your monthly costs are. But 1.2% of assessed value is about where it lies because we have a referendum in Center Township to support the schools. So until that sunsets off or gets renewed or whatever happens, it'll be there. The normal rate in Indiana is about 1%. Now, if it's an investment property, it'll be residential investment be 2%, and if it's commercial property, it's going to be taxed more at 3%. possibly again with a little uptick for that referendum payment.
Yeah.
Other things are what home insurance has gone up too, Greg, right?
Yeah.
Home liability. We've had some claims lately with, around the area with hailstorms and windstorms and other things. So, got a
Yeah,
siren
definitely.
coming by. I may have to mute this in a minute.
No worries. Um, we uh, we've seen just with clients buying second homes and snowbirds, whatnot, going to Florida, for sure. Property casualty has really surprised a lot of people because they've been in arrears in essence, same with taxes. And then now the future holds double, if not triple increases for an
Right.
annual basis. And same
Yep.
with HOAs. We're seeing HOAs as high as almost $2,000 a month,
Yeah.
depending on
Yeah.
where they live and how close they are to the water. And some are even, an hour inland and they're
Yeah.
getting triple property casualty numbers. So it's really just changed the market down there for sure as far as
And
accessibility.
And we often help people find realtors and actually kind of source them out and can refer buyers to areas. So for second homes, so it might
Right.
be, gosh, it could even be Gold Coast in Chicago. It could be in Michigan. It could be down in Florida, like you mentioned, or Texas, or anywhere in the country, and actually vet agents in those areas to help you have good advice when you go to shop. So if you don't know anybody down there, don't worry about it. Talk to your local real estate agent and they can give you some good guidance on who to work with or
Some great
consider.
tips. Yeah, thank you. And by the way, how does one get a hold of you?
So I'm available here in Valparaiso at Remax Lifestyles and through online. You can find me at mattevansteam.com or themattevansteam.com, or in our case for the whole company, it's lifestylesindiana.com.
All right, very cool. What about we're big advocates in owning some sort of real estate in your portfolio as an asset class, for sure, whether it be large scale REITs that can ultimately pay you a dividend, whether it be, if you are a flipper or whatever, then hey, go to it. Let's try to talk about getting LLCs, making sure you're protected, and all of these things that can really affect your dollars. If you're going from let's say one stage all the way up to multi-billion dollar REITs and owning big boxes and going into these, different groups and places to invest. What are you seeing as far as the flippers of the world and the, in and out? Is that still a rage? I know it has been obviously with HGTV and a number of different
Right,
things in different cities, but what are you
right.
seeing here?
We still have people doing that around our local area, and they've been doing it for years. I would
Yeah.
say the margins are probably thinner than ever as
Okay.
costs to renovate have gone up. And as the market is kind of, I guess, leveled out, so to speak, we've seen a slight increase in home prices this year. The median price has kind of stabilized as far as increasing. So that's been kind of healthy. But the amazing thing is that median prices are up 191% in Valparaiso over the last 10 years. So from 2014 to 2024, we've seen median prices go up 191%. So that's that attainability, affordability measure that I mentioned.
Yeah.
But also it affects the flipper, right? Because they're spending more to get the homes that they hope to renovate and deliver. So I think where the opportunity is there tends to be they're getting a great deal either from a foreclosure or a sheriff's sale, or perhaps they knew somebody that needed to dispose of a home that was in really, really rough condition and nobody was willing to touch it. It needed maybe some foundation work, maybe some roof work, maybe new windows. Those are opportunities for people to come in and fully renovate. I think right now, Greg, gone are the days of the cosmetic flip, if you will, where you can come in, put some new light fixtures in, put some paint on it, and it sells.
Yeah.
I think those are tougher and tougher to find.
Okay. Great advice here from Matt Evans. Matt, I just want to thank you for being on the show. I really appreciate the time and thanks for the help. He said where you could find him, obviously online, Matt Evans team. You can just Google it and it's right there. So,
Hey,
um,
thanks for
thank,
having me. I really
yeah,
appreciate
and
the
thanks for
opportunity
being
to talk to your
a great
crew.
community member.
You're welcome. Thank you.
Have a great holiday, everybody.
Thanks for tuning in to Money Matters with Greg. We hope you gained some valuable insights today. Remember, your financial journey is personal, but you don't have to go it alone. If you enjoyed the show, be sure to subscribe and share. Until next time, here's to making your money work for you. Securities and investment advisory services offered through LPL Financial, a registered investment advisor. Member FINRA SIPC.